consumption trends. Second, prolonged monsoon that caused disruption in parts of the country. Third, commodity price trends continue to remain divergent year on year. Collectively, these dynamics created an operating backdrop that demanded agility and resilience. Let me double down on the immediate and the long-term business implications of GST reforms. As a result of the rate changes, 40% of our portfolio transitioned to 5% GST rate bracket. We swiftly implemented pricing and grammage changes across more than 1,200 SKUs, passing the entire benefit to consumers. To ensure a smooth transition, we extended comprehensive support to our trade partners, facilitating pipeline stock liquidation while ensuring clear and consistent communication to trade partners and consumers to minimize market disruption. From a long-term perspective, these reforms are expected to enhance affordability, boost disposable income, uplift consumer sentiment, and unlock opportunities for premiumization across categories. However, in the short term, these changes led to transitory disruption across channel as trade partners postponed orders to clear existing inventory. Additionally, consumers delayed pantry replenishment in expectation of lower shelf prices. These factors, coupled with pricing volatility arising from multiple prices in the market, has resulted in a short-term impact on sales during the quarter. In this backdrop, we delivered competitive growth with a consolidated turnover of rupees 16,061 crores, resulting in 2% underlying sales growth and flat UVG. Gross margin stood at 50.9%, almost flat year on year. We have stepped up investments in our brand and business, resulting in a year-on-year increase of circa 80 BPS in our A&P spends. As a result, EBITDA margin at 23.2% saw a dilution of 90 BPS versus September quarter 24. Profit after tax before exceptional items was down 4% due to lower EBITDA and a decline in the net finance income stemming from our strategic capital allocation decisions. Profit after tax grew by 4%, primarily driven by one-off positive impact pursuant to resolution for prior year's tax matter between the UK and Indian tax authorities. From a first half perspective, we delivered a USG of 3%, led by 2% UVG. EBITDA at 23% was down 110 BPS year on year, in line with our previous guidance. PAT BI declined 4% while PAT grew 5%. Considering our performance in the first half of the year, the Board of Directors have declared an interim dividend of Rs 19 per share for the year ended 31st of March 26, translating to a total payout of 4,464 crores. Moving on to a segment performance for the quarter. Home Care continued to strengthen its market leadership in the quarter. Mid-single-digit UVG translated to a flat USG on account of price reductions taken previously. Fabric Wash delivered mid-single-digit UVG, while Household Care delivered double-digit UVG. Our liquids portfolio continued to perform well, delivering sustained double-digit growth. Beauty and Wellbeing delivered 5% USG, driven by robust growth in skincare and health and well-being, which was partially offset by transitory GST-led impact in hair care. Hair care continued to strengthen its market position, albeit witnessing a decline of turnover in the quarter. Skincare, including color cosmetics, grew in high single digit, driven by continued momentum in the Future Core and Market Makers portfolio and a well-executed winter loading ahead of the season. Health and Wellbeing maintained its strong triple-digit growth trajectory, and Challenge of the Future sustained its competitive double-digit growth momentum. Personal Care turnover growth was flat, impacted by GST rate transition. Skin Cleansing delivered a competitive performance underpinned by strong double-digit growth in premium soaps. Oral Care witnessed a marginal decline, while Close-Up delivered low single-digit growth. Foods delivered 3% USG with low single-digit UVG. Beverage portfolio comprising tea and coffee delivered double-digit growth. Within that, tea grew in high single-digit with positive UVG. Coffee continued to deliver double-digit growth driven by pricing. Early green shoots were observed through sustained UVG in lifestyle nutrition, while turnover declined, led by pricing actions taken in the previous quarters. Packaged foods delivered a subdued performance amid GST transition. Ice cream turnover declined year on year on account of prolonged monsoon in parts of the country and GST transition. We remain firmly committed to accelerating our volume-led growth through 4 key priorities. Number 1, radically sharpening segmentation of portfolio, channels, and media play for different consumer cohorts. Second, being bolder in transforming our core brands to make them more modern, desirable, and youthful. Third, future-proofing our marketing and sales capabilities by enabling superior online brand discovery and fulfillment. And fourth, investing disproportionately to scale our high-growth demand spaces. These priorities, combined with supportive macroeconomic environment, will position us to accelerate competitive, volume-led growth in mid to long term. Looking ahead, the GST-related transitory impact continues into October, with normal trading conditions anticipated early November onwards. If commodity prices stay within the current range, we expect a low single-digit price growth. Overall, we anticipate second half of this financial year to be better than the first half. Our EBITDA margin for the upcoming quarters is expected to remain in the similar range, excluding ice cream business. Ice cream business operates at a margin lower than HUL average. Consequently, the demerger is expected to result in an improvement in our overall EBITDA margin going forward. We remain committed to executing our strategy with sharp focus and agility, prioritizing competitive, volume-led growth across our portfolio. With this, we complete our prepared remarks. Now we can take questions.
Okay, Ritesh, Priya, hi, and Priya, good to be chatting with you. Congratulations on the quarter. And contrary to the update that we've seen, the numbers are seemingly good. So you did say that by November you expect the GST impact to slightly lift off. In light of that, what is the outlook on volume growth, volume recovery, anything you could share on that?
Yeah. So as you mentioned that both elements, the work on overall what we have done in the portfolio, transformation, the four key priorities, improving macro conditions, and GST transition, which will start getting stabilized from early November onwards. We do expect our second half of the financial year to be better than the first half of financial year. And our focus will be squarely on volume-led growth.
Right. Congratulations, Priya, on the appointment, and congratulations on the elevation, Ritesh, as well.
Thank you.
Your first, your last, interaction that we are having. I have a two-part question for Priya, and the question is basically from a very near-term, immediate term, and the long term. So in the very near term, if you could tell us secondary sales, how was October festive season? How is it panned versus your expectations? And because of the GST rate cuts that have happened, what are the incremental volumes that you're anticipating over and above what you were earlier as well? Because before the cuts, you all were saying that the second half will be better than the first half. And in the long term, the medium to long term, what's the strategy to structurally uplift volume growth and revenue growth over what we've seen over the last 3 years?
Sure. Let me start with the structural shifts that we will make and our focus. We will be obsessed with volume-led revenue growth. This will be our focus, our obsession. There are 4 pillars we will focus on as a strategy in the future. The first is that we will segment radically our consumer segments in India. There are distinct consumer cohorts emerging in India: power spenders, premiumizers, and democratizers. And with our price portfolio, which spans across the pyramid, we have a unique opportunity to serve all these emerging segments in India. We will future fit our marketing and sales frontline machinery. Our marketing will become much more social first demand generation, and we will invest in ensuring that we are investing behind quick commerce and e-commerce. We will radically transform our core brands, making them more modern, youthful, contemporary. This will be our focus. This, along with investing disproportionately behind a few high growth segments to scale them and make markets in India, will be our priority and our focus. So really simply, volume-led revenue growth is what you should hope for in the future from us. Ritesh, you want to take the
short term
first?
here and now. Let me just talk both the quarter gone by and then what we see going forward. If you look at the quarter gone by, September quarter, I'll put into 3 different portions. 40% of the business was benefited from GST rate change. There's of course a short-term transition impact which we spoke about, and hence categories like hair care, skin cleansing, they saw the impact coming in. Hair care has grown very strongly for us for the last several quarters. It is competitive growth this quarter as well, but headline growth has got impacted. Same is the case for skin cleansing. So 40% business saw a short-term impact coming in. 20% business, which is, let me say, skincare, tea, there was no change in GST. We saw these businesses growing in high single digit, also supported by volume growth within this growth. Third, last 40% business is our home care business, where we saw a mid-single digit volume growth on the back of a strong high single digit volume growth in the base. Overall, this volume growth was muted, and we had a flat growth of USG because of the price declines. Today, commodity headline crude is almost 10% lower year on year. plus the competitive actions we took, which we spoke about it earlier, put together had a negative impact of pricing on home care. So this is how the 2% growth for the quarter has come out. Then to answer your question on what do we see October onwards, clearly once things stabilize early November, there are multiple prices in the market, old MRP, new MRP. Of course, with all the amount of support that we have given, this will stabilize in the market. We do expect that typically for FMCG business, two things are important.
Yeah.
The net overall disposable income which consumers have and the consumer sentiment. GST will end up supporting both of them. So we do believe that we will start seeing a recovery of volumes going ahead.
Right. So do you have a quantifiable target when you say volume-led growth? Because a large part of your business obviously impacted by macros, but a small part of your business, which is growing fast, is immune to macros. If you could give us a quantifiable target that you have here.
Yeah, we will maintain the range guidance that we've always given you. I think what's important to understand is how we will manage pricing as we go along. Pricing, we will continue to be in line with the way commodities are diverging. When you look at our commodities, we have commodities like Ritesh mentioned, like crude, like tea, which are deflationary, and other commodities like SMP and palm oil, which are inflationary. So we will continue to be gradual in our pricing, really focusing on volume-led revenue growth.
Mid-single, high single, any sort of quantifiable targets?
We will stay in our range guidance.
Priya and Ritesh, both congratulations to both of you.
Thank you.
I think, Priya, what I wanted to ask you is that, you've led the entire beauty and well-being segment, extremely well. I just want to understand, is there anything that you would want to take as a learning from that and implement across the categories now that
Sure.
you're in charge of the entire company?
No, sure, thank you. The beauty and well-being market globally and in India is extremely dynamic. Two or three things tend to be true of beauty and well-being across the world and in India. The first is it tends to premiumize. It secularly premiumizes. Consumers, as they become affluent, start adopting more beauty regimes and they grow their beauty regimes. The second is innovation is the lifeblood of a beauty market. That indeed is something consumers are always seeking more benefits. And the third is the beauty discovery of brands happen online. And consumers like desirable, modern, youthful brands in beauty. And all of these continue to be relevant in India. We have an incredible beauty business in India. We are leaders across hair care, skin care, and color cosmetics. The team has done an excellent job in transforming towards a more social-first marketing, towards channels of the future. And this is something we will continue. Beauty and well-being continues to be a big focus for HUL.
Just to follow up on that, anything on minimalist, any update that you
Yeah.
have, any targets now that you have in place for minimalist specifically?
Yeah.
Because that's been growing exceptionally well.
So it's been 2 quarters since we're running the business along with the founders, having acquired and completed a transaction in April of this year. Both quarters, the business has grown in very strong double digit. The 4 areas of synergies we had called out when we acquired the business. Synergies for R&D to bring more innovation. We are now expanding the portfolio into more spaces within face and within body and hair as well. So that's number 1. Number 2, expansion of distribution in the country, and we have a fabulous distribution as Hindustan Unilever. We will leverage that might to selectively go into stores and get more business offline from Minimalist. Third is our entire ability to get our supply chain cost structures giving benefit and hence our ability to further invest in the business. That's the third area we're focusing. We are seeing results already in the first 2 quarters. And fourth is supporting them for further international expansion, leveraging the ecosystem of Unilever. All the 4 synergies we have deployed as we speak, we're seeing early green shoots in terms of acceleration further in the growth and profitability as well.
So any other acquisitions in any other categories
Sure.
that you would be eyeing?
See, we have always maintained that there are 4 different ways we want to expand the portfolio.
Correct.
First, we will always go to our large brands and expand them into more demand spaces and to more formats. So Pond's getting into serum, into sun care are a classic example. Second, we will bring brands from stable of Unilever as relevant in the country. So Liquid IV, Nexus, Love Beauty Planet Simple are classic examples where we have amazing brands in the stable of Unilever, we're able to bring them in the country. Or for that matter, third element is launching our own brands in India. Numerology, Sun are classic examples of that. And once we have done all these 3 and we do find spaces of demand that we want to enter, we will focus on bolt-on acquisitions. Oziva that we did earlier, Minimalist that we've done now are very good examples of us doing that.
And what kind of synergies have you realized so far in Minimalist? How much more are you expecting here? And in terms of scale, what proportion of Minimalist products has already been integrated into your supply chain?
Yeah.
And what's the revenue scale there?
So we are focused on two elements to start with. First, continue to build the innovation pipeline, leveraging our R&D, so that work is started. Second, here and now, more tangible realization is on supply chain synergies, procurement, logistics, production. That, as we speak, we started deploying already as we speak.
Priya, what's your strategy on the foods business? Because beauty and well-being, obviously, the underlying macros are fairly strong. The foods business, the agri part is volatile given the commodity conditions, but also, the acquisition that you all made of GSK Consumer hasn't grown as at the pace that the street would have liked it to. So, what's your strategy on growth in the foods business, and what's your target here?
Yeah, I think when you look at our foods business, I think we need to separate it into the segments, right? The first is in terms of tea, coffee, and beverages. We are leaders in beverages, in tea, and this will continue to be a focus and priority of volume-led growth. The tea is now deflationary, and therefore volume will be a key focus in this deflationary environment. When you look at foods, I mean the market in foods, we are leaders in condiments with Kisan. Growing our condiments business and expanding our play in condiments with Kisan will be a key focus for us. When you look at our Horlicks business and our HFD business, this indeed is an area where we have begun to see early green shoots of the work that we have done to correct our price pack architecture. What I am excited about is the opportunity that exists with wellness and nutrition growing in the country. There is a clear consumer trend on wellness and nutrition, and Horlicks is extremely well placed to advance based on this, and we will be focused on that going forward.
Right. Do you have a strategy on the personal care segment? We've seen a high single-digit decline in volumes this time, but what's done well is premium soaps. Now with palm oil also on the deflationary curve, any improvement, any expectation of volume improvement going ahead for your personal care segment?
Yeah, I think when you look at our personal care business, we're very pleased with the competitiveness of our personal care segment improving. This is very critical to us. What augurs well is the double-digit growth that we've seen on premium soaps. This will continue to be an area of focus for us, including body wash. Today, body wash market in India is highly under-penetrated. It's under 2% penetration, and developing the market here will be key to our strategy on personal care.
Okay, and Ritesh, your outlook on margins, this time 23.2, slightly above that guided range of 22 to 23%. Are you comfortable being in that segment, or are you impacting some improvement on account of GST, and would you like to go up a little higher?
Yeah. So if you look at our first half margin for the last two quarters put together, it's 23%. It's at the upper end of the range we had spoken about. Going forward, we expect this to be maintained at these levels. What you will see, the headline number will change once we finish the demerge of ice cream. You will see this number improving.
Yeah.
And on an annual basis, we have 50 to 60 BPS benefit of margin coming in once ice cream gets demerged. September quarter, December quarter also non-season for ice cream, which means the impact is a little more than that. So subject to adjustment from ice cream, our margin levels will be maintained at the current levels.
So that's between 23 to 23.5%. Would that be?
So currently we are at 23%, let me say 23.2 for this quarter. We do expect that number to be 50 to 60 BPS on an average annually better.
Right.
And within next 1 or 2 quarters, because the impact is much higher in non-season, it will be more like 80, 90 BPS impact from ice cream. So more like 24-ish, I would say.
Okay, 23 to 24 is what the analyst would be very comfortable with. And now that you're going to Unilever Global, the important part is that there have been comments coming in from the global leadership as well, that the two markets that they'll be focusing on, India and the United States. So what kind of increased support can you expect from the globe on the back of that, and what could that mean in terms of incremental growth here in India?
So, India has always been critical for Unilever, honestly. HUL at the center of that. Given that we are now the fastest growing large economy in the world, not surprisingly, Unilever calls out India as a key focus. We will continue to benefit from the R&D capabilities, bring in the right brand portfolio as relevant, and the category strategies, understanding category trends around the world. This is the area of focus, and it augurs well for HUL that we will double down behind India.
Ritesh, one question that I had in my mind was just circling back to that volume recovery thing.
Sure.
From what my understanding is that July and August have been at par with where Q1 was, correct? And because of rate rationalization of GST happening in September, the volumes were impacted. Is that reading correct? Was it in line with where Q1 was? And, Mangalam tried asking you if you can just give us probably a range, maybe if not low single digits, mid single digits kind of expectation in the second half of volumes is what you're expecting?
Yeah.
Because you said second half is going to be better.
Yeah. So let me just take these two questions separately. Now, first of all, coming to the conversation on outlook, we did mention that the second half of the financial year will be better than the first half. This change will be all volume led. To Priya's point earlier, this is where our focus is. In fact, we expect price to continue to remain, given where the commodities are today, to remain in low single digits. So the acceleration that you want to see in second half will be all volume led. Now that's short term, but do remember, at the end of the day in India, we are a $54 per capita consumption FMCG industry. There's a long runway for industry to keep growing. And as market leaders, our focus always is on market development. And we know that the overall demographic dividend of the country, we know the consumption story of India. And as that happens, we do expect that going forward in mid to long term, we do expect market growth to start with. Will be better than the market growth that we've seen in the past periods, number one. Number two, our stated objective always is to grow ahead of the market and be very competitive. And third, also remember that at some stage, not now, pricing will come back. If you look at last 1 decade, 2 decades, we always had 3 to 4% pricing in our industry, which has been more like 0 to 1 for last 4 to 6 quarters. Now, as things will stabilize, we do expect that pricing growth also to come back together. So all three elements will start put together. Very difficult to put a number to it, given there are so many moving parts to that, but I hope just it helps you to understand overall the growth algorithm. And coming to, the second part of your second question, which was the first thing that you asked on GST. The impact started to happen more like September as announcement happened on GST, which all categories will get benefited, and hence we saw 3 different impacts coming in. Whole month of September, in October, and we expect early November that to stabilize. Number one, trade, as they were anticipating new price inventory to come, so they have done destocking. Number two, consumers, they were anticipating lower prices on the shelf, so they also did adjustment to their pantry. And third, in this period, as we have old MRP and new MRP, including old MRP, we have given support, but there are 2 different MRPs in the market, there are 2 different grammages in the market. These things take some weeks to stabilize. And hence we mentioned that from early November onwards, we should start to see normal trading conditions.
So, do you have any in the marketplace, any estimates of how secondary growth in the month of October has been? Primary sales obviously disrupted because of the GST transition. How has secondary growth been?
Yeah. See, for our industry and especially for Hindustan Unilever, we have trade inventory between our own place, our distributors in the market, but they're always not very high level of inventory. They're typically 4 to 6 weeks, depending which category we're talking about. So there is not much of disconnect between primary growth and secondary growth. Now, we do expect, as I mentioned, November onwards, as the first early November, as things will stabilize, we should start seeing overall the stability to bring growth back, which is what got impacted for last couple of months between September and October.
All right, and final question from my end, Priya. Volume growth in the FMCG industry over the last decade has lagged GDP growth. So what is it that you believe HUL can do going forward for it to at least get to GDP growth, if not above GDP growth over the next few years?
Yeah, I think Ritesh mentioned, and I think it's important to first look at the macroeconomic variables of India and how, what's happening. First is the GST reform itself, and the GST reform is most welcome, which the government has done, because that augurs well for consumer sentiment improvement, overall demand improvement, and we expect this to gradually improve. We've had a good monsoon, maybe an excessive monsoon, and we need to monitor this closely, but monsoon is good. This, along with overall rural wages, are showing improvement, and therefore there is conditions that macroeconomically seem that market growths will improve. I think what HUL has always been good at is creating markets. Now, when you look at the per capita consumption of CPG in the country, in a growing economy like India, the per capita consumption of CPG is under $54 per capita. And there is a huge headroom to grow in a growing country like India. And that is HUL's focus. So to drive market segments of the future, we will invest disproportionately behind these, radically transforming our core brands to make them more modern, more premium, more youthful. Because it is the Gen Z consumers of India who are changing India, and more digital, more online, and more social first. So this will be our focus as HUL.
So what 3 categories would you call out for the future if you had to?
All 4 of our segments are critical for us, given the composition of our business of HUL.
But if you could have one key growth lever, because you did mention that second half would be better than the first, which category do you think would be one of the first to drive that for you?
I mean, it's aligned with how the categories are shaping. So if you look at the category shape for us, 40% of our business is home care, so that is a critical category for us. Beauty and well-being is fast evolving, as is foods. in the country, and therefore again a critical focus for us. And we are the leaders of personal care. So I will keep coming back to the fact that all 4 categories matter, but it's the shape of the categories that is changing. I think what is special about HUL is how we straddle the price portfolio and the brand price pyramid. And therefore our growth will be across the segments, not just in urban top end, but also in the middle of the country and in rural. And this straddling of the pyramid, when the country grows, HUL grows.
Okay, thank you very much.
Thank you.
Thank you.
Thank you very much for all your
All
support.
the best.
For all the people who do. Yeah. And for thank you for the partnership. Thank you so much. You are taking over as head of global M&A, global treasury, and global ventures. So that's the next frontier. Thank you so much.
Good luck.
Thank
Good
you.
luck. Very excited to see what's ahead for you.
Thank you.
Good luck. Thank you so much.
We'll keep pestering you every conference.
We should take a picture.
Yeah, of course.
Yes, take one.
Yeah, I said.